Hey, what's up, guys? Welcome back to the channel. Today, I'm going to be covering my Roth IRA portfolio. I'm going to take you inside of the actual portfolio, share with you what I have in there and how it's performing right now. And then I'll take you into the spreadsheet and share with you, how it's performing like behind the scenes so you can see everything and share with you my current thoughts as of right now in terms of this portfolio and if there's anything I want to do or whatever. So let's get into it. I'm going to record the screen on the phone, share the portfolio with you. This is, at the time of this recording, this is Friday night here in China at 8:30. So the market is in the pre-market here right now, and it will be opening soon. I still have actually an hour and a half before it opens. But anyway, 3, 2, 1. Bam. All right. Let's open up Charles Schwab. That's where the Roth IRA is. I'll refresh it for you. Actually, let's just go back here to the home page. There we go. Let's refresh this. So like I said, this is 8:30 at night here in China. This is the pre-market. So right now in the pre-market, see it's moving around a little bit, but the Dow is about flat. The NASDAQ's up over 0.25%, and the S&P is on its way up to 0.25% right now in the pre-market. And my portfolio is up like over 0.75%, so almost 1% already. So that's what's going on there. The value right now, 59,948, and I have 25,245 in cash. So I have a lot of cash on the sidelines here. Let's go view all the positions and see what's actually in here. So for my stocks, I only have 2 stocks, which is RGTI, Rigetti. It's a compound or quantum computing company. I had more of this and I sold it and took my initial investment out. So I still have 70 shares left though, and it's still up 143%. So that's good. SoundHound, same thing. I sold the amount of money worth my initial investment and took that out. So again, this is just house money. Right now, it's only up about 29%. But yeah, both of these are just house money. I've already taken my money out of there. So down here at the bottom, we have 3 different ETFs. I have WPay, which is Round Hill's. It's like a basket of leveraged ETFs, like leveraged single stocks, like NVIDIA and Palantir and Robinhood, and et cetera, et cetera. There's about 10 or 12 names there, and they're all leveraged, but they do have, because they're trading swaps, they get income each and every single week. And yeah, this isn't doing too well. I bought it at kind of a bad time, I guess. We got beat up by tariffs and it got hit pretty hard, but it is red on the market return. I'm not sure the total return, but we'll check that out in a minute on the back end in the spreadsheet. Next, I've got SCHG, which is Schwab's large cap growth fund. It's kind of like Vanguard's VUG, the exact same thing pretty much. This one, I've got 320 shares, and it's up over 11%. And then we have SCHB, which is just Schwab's broad market ETF. It's exactly the same thing as Vanguard's VTI. It's no different. 382 shares. And this one is also up over 10%. And then last but not least, we have these 2 positions here. Have a money market fund, SWVXX, which is Schwab's money market fund. It's just $1 all the time. It was a 4% annual yield, but it's dropped down slightly now because of the rate cuts, but it pays each and every single month. So anyway, I got $12,630 in there. And then I actually have another $12,615 in actual cash, which is a total of $25,000 in cash altogether if you add the money market fund and the actual cash on hand. So that's what I have in the actual portfolio. Now, I did receive one distribution this week. I'll show you that in the history here. WPay paid me on December the 3rd, $82, and it is on drip, so it dripped. Just reinvested to average down and try to get my money back on this thing. And then I'm probably going to do something else, to be honest with you. I'm going to go ahead and remove this from the portfolio and do something. I thought this was going to have more growth potential, but it got beat up pretty bad. I thought it would do much better than it has. And So I guess I learned my lesson there, but I will get my money back first before I cut it. But I will be cutting this one from the portfolio. So now that you know that, let's go have a look at the spreadsheet and see what's going on behind the scenes. So let me record the screen here on my computer. It's a little better that way. Let's see, 3, 2, 1. Bam. All right. So I'll make it bigger for you guys. Let's do 150. Okay. So here's all the positions that I just showed you in the actual portfolio. So nothing's changed here. We've got these 2 empty slots. It has something here. I can't remember what it was, but I sold it. I can show you that in a minute though. So here's all my positions and my cost averages, which is basically what I just showed you in the actual portfolio. I just put the data in here so it can show you all the back end stuff. So if we look over here at the actual performance, which is the most important metric, right here we've got Rigetti. Market return is positive, total return is positive. Now the total return is slightly different than the market return because I was selling options, generating options income from this before. And so it slightly had an offset because I collected income on it, and it lowered, made it raise the total return a little bit higher. And you can see to the far right here, it is 3.5% of the portfolio allocation. So the next one you have here, I'll put the blue box there, WPay. You can see it's red across the board, at negative 3% on the total return. You can see right here, as far as total return goes, we got to get about $400 in dividends to get flat on this thing. That is if it doesn't go up. But it looks like it's heading in the upward direction now, so this can change. And I hope it does change pretty fast because I will probably be getting rid of this and looking to do something else. And the next one we see here, SCHB, you can see it's positive across the board here. The total return is slightly higher than the market return because this does have a small dividend, not a big one, but it pays quarterly. But total return is over 10%. Actually, this is a little bit higher right now in the pre-market, so this is already over 10% in the pre-market. So this is going to change when the market opens. This spreadsheet doesn't show the pre-market data. SCHG, again, we are positive across the board. And you can see here 11% on the market and slightly over 11% on the total return. Again, this has a small dividend, but not big enough to make any difference. And then lastly, we have this sound hound position, positive across the board. Market return and total return are slightly different. Again, just like Rigetti, I was selling options, generating income on this. So it has a slight offset there. And so that's what we have going on here. And you can see this WPay position is way too big. Also 18% of the portfolio when, the most of the money should be here in SCHG and SCHB. So it's a mistake on my part. Just go check out the dividend log and I'll share with you guys what's been going on here. What is this in the middle? What is going on there? Oh, I didn't remove these dividends. I think this was from XDTE back when I owned it, and I didn't remove the dividends there. But this other stuff here is still in the portfolio. So just a quick little recap here of, I'll just show you December for now, because this is December. I received $82. I just showed you that in the portfolio just a few days ago from WPay. Now, SCHB, it pays quarterly. You see the last payment was in September, so it should be paying me in December, but I think it's at the end of the month. I can't remember the date, but I'm pretty sure at the end of the month. And the same thing for SCHG. See, they paid me back in September. They will also pay me, but I'm guessing the payment is going to be similar to these that I received last time. So probably going to get like $26 here, another $8 here. And then I still have 4 more payments coming from WPay. So that should get me close to the breaking even on that. And if that does, that will be great. Next, if you just look over here to the side, yeah, it's just it. I've just made the $82 so far this month. My goal was to get 500. Anyway, really quick, lastly, I'll show you the sold positions from this year, this is all, see, this is January the 1st, all the way up until 10/7. So these are all the positions that I've had and sold for the year. I'll move this over. So you can see we had Ulti in here. You can see it was negative on the market, slightly positive, $700 on total return, which is what, 26% market and 4% total return. You don't care about the dates, do you? Next one, QDTE. I didn't have any dividends from that, so I just sold it like ASAP for some reason. I don't know what I did. YMAX was positive 3.27 on total return, but negative 5 on market. YMAG, I had this one. You can see this one was positive on both the total return and the market return. So that one wasn't too bad. Tesla, I had that one. Look, big drawdown there, negative 43%, and you can see the total return was basically flat. Coney, again, you can see the huge drawdown, sold it for a loss. Total returns minus 2%, market returns minus 54%. Yomax. I bought back into QDTE for some reason, sold that one too. Walked away with a 3% total return. Nvidia, Misty, these two. Misty was a positive total return, 18%. Nvidia was negative. WeRide, this was just an options play, just like a wheel strategy, earn some income, 13% return. Then we have the XDTE, 6.3% return. Then we have Rigetti and SoundHound. These are the partial shares that I sold to get my initial investment back. So 257% return and a 78% return. And then I sold QQQI just because it was moving slow and I just didn't see the point of holding on to this. But it was positive 8%. Maybe I should have held on to it. But that's the positions that I sold. Thought I would share that with you guys. So like I said, in terms of this portfolio, I'm probably going to get rid of the WPay. It doesn't seem like it's going to do what I thought it was going to do. I thought it was going to get more growth potential and pay some income at the same time. Because I was looking for income so I can have money to invest back into the portfolio and continue growing the portfolio even after I've added my maximum amount that I can add per year, which is $7,500. So I wanted to, have more than that to be able to invest in the portfolio via, earning income. But it has worked out in the past, I guess, because I was growing the portfolio with these other stocks that I sold off, but they were income, but they were taking huge hits on the market return. And I wanted something that was going to be green, like positive on the market return and on the total return, both sides. And, out of the income ETFs that I sold, my biggest return was Misty, which was 18%. But other than that, everything else is like 5 or 6%. And you can easily get more than 5 or 6% return on your investment just by buying the S&P 500. So I didn't see any point in going through all of that just to get, a small percentage return. I can just invest in, non-income paying stuff and get a bigger return. And so that's why I made that shift there. But I was still looking for income to keep adding more money to it. But I want growth and income. And it's kind of hard to find right now. So that's my thoughts, what's going on there. Thought I'd share that with you guys. Let me know in the comments below what you think and anything you want me to talk about in regards to, Roth IRAs or retirement accounts and stuff. Let me know that. And I'll see you guys on the next video.